Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
All right. Welcome, everybody, to the Norris Group Real Estate Podcast. We have a very special guest today, Mr. Bruce Norris. Oh, wait, let me do the official two-page introduction. I got it right here. No, I'm just kidding. Hey, Bruce, how you doing?
I'm good, Joey. How are you?
I'm doing well. Trying to get my lighting right over weekend. So today I thought we would take some time and go through the journey of your timing reports and how they came about. What you learned, how accurate they were, and just I thought it'd be fun to do that, and then get to the end and talk about what this upcoming event we'll talk about and what you hope to accomplish with it.
Okay.
But I honestly know your history. I'm sort of I fancy myself a little bit of the Norris Group and the Bruce Norris historian, but I've heard your journey through. Hey, I got fired. I was working hardware. How did you end up in buying houses, though? That I don't think I've ever heard that
Okay.
story.
Well, I was in sales, and I had somebody that I knew. He said, "Let me show you what I'm doing. I work for a company that buys houses, and so I find houses for him." So I went with him. It was a home in Orange County. We went in. There was a single lady that owned the house. We were in there about 5 minutes. We got kicked out. And went back to the car with him, and I said, the lady will sell you her house. You just didn't listen to her, and you irritated her. So I knocked on the door and got us back in. We bought the house. So driving home that night, I thought, you know what? I think I understand the concept. The basic thing is we have money, you have equity, and sometimes our stuff is cooler than yours. I just simplified it to that extent. I then went, I said, okay, what do I have to work for the company? And I had to have a real estate license. Back then, you could get it in a weekend. So I took a course. I sat in front of the owner on Monday. His first question, and by the way, there were two people applying for the job. This guy had brought his trophy case with him. So he literally had 50 plaques, And then he went first, and I went. He said, "How long have you had your license?" I said, "1 day." And he laughed at me. He said, "Yeah, this is no place for an inexperienced agent." I said, "Well, let me ask you a question." I said, "Isn't the bottom line here whether you buy properties for profit or not?" He said, "Yeah." I said, "You'll know in 30 days I can do that better than anybody you have." And he was like, "Okay." Now, what was interesting, I still had a job. I mean, I was selling electrical stuff to hardware stores, so I couldn't do it full time. I would get there about noon, and he ran ads and stuff, and you're supposed to there were 5 other buyers, so every 6th phone call was you. Well, I didn't wait for that. I didn't know anything about real estate, but I just called every expired listing, made offers on anything that made sense. I was the least popular person in Orange County real estate for the 3 months I was there because I did some pretty bold things. Anyway, long story short, I bought 10 houses the first month, set a company record, made a year's worth of money, and I did it every month I was there. And then I really didn't like how he did business. So I had 3 years.
That's what I was going to get to, is that you learned the ropes, while you were there, but you also learned that it didn't fit the person that you were, the way they did things and the way they just kind of were, right?
I can't even say I learned the ropes. What I learned, I already had a lot of the tools. I learned how to get a yes answer when it was pretty unlikely. So did I understand real estate escrows? No. Title? No. I just could sit across from the seller and figure out, how do we get a yes and have you move on and live with a price that's at 65% of value. So that's what I did well. And there was a lot of things, Joey, when I left that company, there were big holes. I understood how to get a yes answer. I didn't understand how to do a lot of the stuff that you think, okay, oh, now you have to fix your house? What? So that was a lot easier if I was wholesaling it to the company I worked for. But there was a transaction where I was just really disappointed at the outcome. Bought it from a lady that had lived in the neighborhood for 30 years. Neighbors were so sorry she was leaving. They threw a big block party, and then the guy didn't close. And so she had all her furniture sent to Northern California. She had to bring it all back, face the neighbors. She wasn't going. That just irritated me. I said, I don't want to deal with a company that does that.
That's certainly disappointing. So now, correct me if I'm wrong, from what I understand, you worked and you had some success. You bought houses, and you ended up doing your first $1 million in a big transaction, where we've heard the story about how you lost. But what I want to get to is, the next time you went out on a strategy, it didn't really work out. I'm talking about Palm Springs, and that caught you off guard. And is that really what set you on this market timing journey? Like not knowing why things weren't working?
That was my first glimpse at it. It was interesting because I had the success on the 50 building lots that was right outside of the tract of houses I had a problem with. So I had $1 million success selling 50 lots, and 6 months later couldn't sell 3 houses. And you're going, okay, well, that was my first inkling. But a few years later, there was a house on a VA list, and that was really the eye-opening thing that had me just scratching my head. At the time, I had already been doing it for over 10 years. And this was a house on the VA list. I'm going to try and remember. Oh, well, I remember because Aaron's car. Remember, it was Aaron graduated, and I bought his car for $15,700. And then I buy a 3-bedroom house in Riverside that would rent for $500 for $13,300. And what bothered me about it, it was on a VA list, which means all the people that would occupy it got to bid first. No one bid, and the asking price was $15,000. So no one would buy a house for $15,000 that rents for $500. That was first. Wait a minute, and then I was the only bidder, and I knew the formula. So my bid for the $15,000 house was $13,300, and I was the only bidder. And it was that moment that I just thought, I have no idea what happened to real estate. How could you have, the momentum that I could sell 50 building lots inside of, the time frame I had like a 3 or 2 month escrow, and I counted on being able to sell all those lots, and I did. And then it changes where you couldn't sell anything and you had to give it away or trade it for a boat, which I did, by the way. So it just was that aha moment, and I didn't start to learn it as much as I wanted to find the expert that had figured it out. So I went to the library and I looked up every article for 25 years about how real estate works, what's the timing of that type of thing. I just found nobody that gave me a complete answer. I found a lot of people that said things after the fact that actually disagreed with what they said before the fact. And so I thought, okay, maybe you can't figure it out, but I'm going to try. And that was the impetus to try and figure out. And it was probably the biggest thing for me was I didn't have an agenda to be somebody. I wanted to know where to put my money safely and know when to get the heck out of it. Because you're usually in a really euphoric state when it's about the same time you should say, I'll see you later. It's really hard to do. And you also ought to say, I'm going to go all in when everybody hates real estate. They're fearful. But you can do that with charts if you understand them. Can you do it emotionally? No.
So once you figured it out and you're like, okay, I think I've got this, at least this first go at it. I've got to figure it out. What made you decide to give it away? Oh. Well, not give it away, but,
Well, I really wrote that report to help my dad. That was the original thought, is that I wanted my dad to do better in retirement than I knew where he was headed. And so I wanted him to understand he could buy a rental house and it probably would work out really well. And so that was kind of the gist of it. I was already speaking in front of some real estate places. And so that was, I had that door open. And of course, it's interesting when you write a very happy report at the bottom of a market, you're just wonderful.
people can't wait to book you, huh?
Yeah, then they don't believe a word of it. But, I said prices were going to double. But they were just happy it was going to do something other than go down or be dead.
That was what I was going to ask you. I was going to ask you, what was your prediction and then what was the result? So what was the result?
Well, California come back, predicted prices would double in 8 years. And it doubled in 7 and then tripled in 9. And I was like, well, mathematically, that makes no sense to me. And so we had an event where we had hundreds of people, and we were at an affordability number that had never been attained before. We were at 13. We always stopped at 17. And I, in front of an audience, I asked a lender, stated income loans, where does the stated income number come from?
So we're jumping ahead though now, right? Because this is, it tripled, but now you're starting to talk about why you created the next one, which was the crash, right? Okay, so
right. I got concerned that, okay, how did we even get to this price level? Because it never happened. Well, as soon as she answered the question, I said, stated income loans, where do you get the number of the income? She said, oh, we just make it up. And there had to be at least a 40-second pause as I contemplated what that meant, because that was an acceptance of the whole industry. We do not care that the people actually make the money, and the people that buy the loans from us don't care either. We just want to fund a loan. And I went, whoa.
And I'll tell you from the consumer side, because that's the first time I ever bought a house was in 2002. And so did I understand what was going on? No, but my real estate agent brought in a lender that just filled out that stack of papers, right? Initial here. Oh, that's just saying this. Oh, nobody stays in this. You're probably going to refi in 5 years. I didn't really understand what I was signing. I was like, well, I get to buy a house?
Yeah.
Okay.
Right.
I qualify? Me? Okay, let's do it, And so that's how it was. So I imagine there was probably millions of people that were in that same boat,
Oh, sure. And for 4 years, it was an exciting thing you did, right? 2002 to 2006 was cool.
I bought at 202 in Corona, right? 202,000. And like all my neighbors were talking about, well, we're refining. I'm like, why are you refining it? And it's well, because they're worth 300 now. Oh, they're worth 450 now. Oh, they're worth 550 now. And so all my neighbors were just refining to the hilt, and I had a wife that stayed at home, and she was like, no, we're not doing that. We're not doing that. We don't need a new car. We don't need a boat. I just want to be home with the kids and not lose our house.
Okay.
And so we didn't. And luckily we didn't, because, while everybody's, values still went down even below what I had, we had, I didn't have to lose my house because of it, but everybody around me did.
Yeah. Well, that was a crazy time.
So all that stuff's happening. When did you actually decide, like, hey, this is going to hit the fan and I want to figure out how bad it's going to be?
Well, I think in 2005 or 2006, we wrote a report that was...
Yeah, you wrote it in 2006, but, there had been some lead up on why you did it.
Well, but we wrote a report before the crash that had...
Oh, you did?
Yeah, and it was basically telling investors, this is on its way. And that's when we went to take everybody to other states to buy houses. So we had a lot of California investors selling their stuff and going to Texas. That was the state that I felt was the safest, because it virtually went up when California had gone up and gone crazy. Texas had barely moved. You could still buy a house for $120,000. It was new. And so we had a bunch of properties that we bought. But then when the number kept on getting crazier, that's when we wrote the crash and said, okay, this is really going to be ugly.
What was the prediction for California crash?
There was a range. There was if you get this kind of a number of foreclosures, it'd be this. But it was a good half off.
What ended up being the result?
It was a little more than half, not much more than half, but that was unbelievably devastating to people that owned real estate, because they kind of did what you said. As equity grew, they refied it. And so they were pulling out stuff. If they had stayed maybe with the original loan, they might have survived it. But what's also going on, Joey, which is really devastating to prices, was the market became dominated by lender-owned properties. And the lenders were very stubborn at first. Yeah, we owe 400. We're going to ask for 350. And so we had relationships with these REO agents, and they asked us to offer them 100 grand just to smack the lender upside the head and go, you aren't going to get 300 or 200, but they didn't do it right away. What happened, though, the building department had nothing to do. So no one could build a house, right? It made no sense. But those people were employed with nothing to do. So what did the builder or the, like Moreno Valley people that work for the city? They inspected REOs and they fined them $1,000 an infraction a day. Now, most of these lenders weren't in California. So they would get an inspection and say, you have a green pool, you have a broken window, you have a garage door that's cracked. Starting Monday, that'll be $3,000 a day. And it would go to 100 grand, and then they couldn't go beyond that. Lenders freaked out because they weren't getting the 150. So we started buying properties in Moreno Valley for 70, 80 grand. There was one that the lender fine was more than the purchase price, and they had to write a check to get rid of the house that they had a 300 grand loan on.
Wow. Would you say that this time period, as devastating as it was the biggest generational wealth creator that you've had in your lifetime?
Only because I got out. When I wrote the report, we had a track of homes that we were building, and we made sure that was done in time, and those were all done. Had I not gotten out of California, the only thing I kept was my residence, but I had some rentals and I had those other houses. I had 100 total houses I sold in 2005 and 6, and that's the only reason I survived it, because I had made a profit. I had set it on the sideline, and waited for the prices to come down.
Well, and I've heard from a lot of people that did the same thing because they followed you.
Yeah, that was scary though. It's interesting. Again, the mood of when you have a report called the California Comeback and everybody's depressed about the real estate market, they love to hear you speak. When you're at the peak of the market and you write a California crash, when everybody's making money and you can't do anything wrong, that's a very different reception. You're like, what are you talking about, man? I have listings that sell in 4 hours. Yeah, that's not normal.
I've heard you talk about your hairdresser. Everybody's jumping into real estate.
3 of them in 1 year. Where'd she go? Flip it off.
So I was doing insurance for 10 years between 2004 and 2014.
Yeah.
Well, in 2008, guess what? Every application that we got in to sell insurance was an realtor. They were just left the real estate industry. We're trying to start over. But
the guy that was the biggest guy in Moreno Valley that had REO listings by the many hundreds, some almost 1,000. I would be there to speak to their office, and they would go over their monthly numbers. Okay. And it would be like, okay, this guy has 70 closed transactions. Second place, Norris with 1. There wasn't anything other than REOs, man.
Yeah.
And by the way, that agent took our class, our seminar, and made relationship with all those companies before they had foreclosures.
Mm-hmm. So, all right. So after that, once the dust settled, people were actually getting really active. Got to, buy some houses on the cheap. But there was a point where your next time report was in 2012, and it was called All In or Fold. Why was that a big deal in that time frame?
Well, we had really started to deteriorate in price in '08, and it just went down, and then it stayed there. So from 2008, 2009, a lot of the price damage was done, but now you're at a price that's half, and you don't have any upswing. It's just camping out there, and it's camping out there with people getting paid $8,000 to buy one. So my daughter Sarah had an $8,000 check from the government that she got, so she could buy a $350,000 house for $100,000. That's how much they were motivated to try and get somebody back into wanting real estate. Okay. And it just kept on sitting there, and the price from the national number to the California number had never been that close. And I just played devil's advocate. I wanted to know, and maybe it's over. Maybe the differential from California to the national number is not going to be there anymore. So I studied all that, and I came out with the opposite conclusion, that it's all in. And as a lender, we created an 8-year program so people could buy in 2012 and finance it all the way to 2020. And I'd have to say we created our fair share of multimillionaires doing that.
But ultimately, what came out of the report was that yes, it would go up again.
Yes, it would escalate. And as you know, the moodometer chart that we have, that moodometer is very gradual in process. You don't get euphoric in 2012. You're still afraid in 2012 and 2013. You feel a little better in 2014. And then by 2018, 2019, okay, we're losing people that cut our hair again. But it's a process, because especially when you sell properties, you realize, okay, I don't have any multiple offers anymore. And when it was in the heyday, you knew by noon you were going to have 7 offers and you were going to sell it. That's a very big difference in confidence level of what you can get, you know.
The next time that you jump back into the market time report, there was one in between. There was category 5, but the one where you really made some headlines is one that you thought was going to be your, you know what, this is the last one I'm gonna do, and it was 2% mortgages, 40 trillion in debt, and other surprise endings. That was. I remember that because that's the first time I ever went to anything that was Norris Group event.
Okay.
You know, Aaron had asked me, like, hey, are you interested in coming out? If you are, like, come on out, take a look and see if this is something that you'd want to be a part of. And so that was my introduction to the Norris Group.
Okay.
And so I came in and I saw, you know, it was like 400 people at the convention center, and it was you doing your thing up there, and it was an hour of Aaron doing his, you know, innovation in real estate and what's coming, and so I was excited. But that was February 4th, 2017. So how cool was it to actually see that 2 whatever number come to fruition? Because you were early on that. I mean, you came out and said, hey, it's gonna be
Well, first of all, most people thought, well, of course, that's just really a dangerous thing to say, Bruce, because that'll never happen, you know. So it's interesting. John Burns, you know who he is. He's got a big following at the builders and all that. And he and I are exchanging emails as the 10-year T-bill goes below 1%, which was crazy. And that made the mortgage rate go below 3. It's such a significant event because of the safety it created. So, you know, one of the things that the event that we'll have is there's a chart that shows 40% of all residential real estate is owned free and clear. And another 40%, which is like up to 80%, has a mortgage that's under 5. It's just sort of like you have built-in safety for a ton of the properties. Very little of it is at risk. And that's why, you know, if you go on YouTube, oh my God, you know, foreclosures are up 50%. Well, what did they go from 2 to 3? In other words, it's a rounding error. In 2000 and let's say 8 at the worst, it was 70% of the California market. 7 of 10 sales were lender-owned properties, and it was the value of what you had. Well, now it's not even in Florida. Florida's like, oh my gosh, Florida's terrible. Well, Florida's REOs and short sales did not make up 1% of the closings. They do not impact the value of what you have. Now, what does? Okay, you can have new homes that are having a hard time selling, and they have a lender that has a 12-month loan. And so, okay, I'd like you to get paid back, please, that type of thing. But as far as the normal person fearing that foreclosure are going to dominate, there is just no way.
All right, everybody, that's going to do it for part 1 with Bruce Norris as we talk about his journey through market timing. Be sure to tune in next week as we get into his latest coming next year in February of 2026, Beyond Uncharted. What's next has never happened. Tune in to hear about why he decided to write another report.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.